Good afternoon. Good afternoon, everyone. This is Bag of Dawn at Stock Market Caddy. It is Monday, November 15th at 2 p.m. And we wanted to demonstrate for the benefit of our annual members, as well as our monthly members, and as well as those that might be following, how we use one of our tools, which is the SMC Trade Generator Pebble Beach. There's a number of ways to use this. One of the easiest ways is this little tool right here, from panic sell to euphoria. In terms of buying stock, yes, buying stock and selling a covered call. Now I'm going to go ahead and go through the mechanics of doing just this, and not suggesting anybody else do this. Not making a recommendation to buy or sell. This is really just a teaching moment. And let me first go through the mechanics, and then I'll explain what in fact we have just done. So I'm going to come in here. I'm interested in buying stock. I think that maybe the market isn't going to quite break down. Maybe the market's going to bounce into the holiday period, and I want to buy some shares. So I don't want to buy anything that is already in euphoria. I don't want to chase anything. So I'd rather buy something that is has been in a panic sell position. So what I'm going to do is I'm going to buy 1,000. Well, I'll tell you what. We'll only buy 500 shares of Oxy. I'm just picking from this list here. These 13, these 12, these are the most on the S&P. These are the most beat up. I don't even need to look at a chart. I'm going to do this without even looking at a chart. Disney is tempting. AMT is getting hit hard today. I'm not sure what that's about, but we'll come in here and get Oxy. So I'm going to click on Oxy, and it is going to bring up my little trade window, and I'm going to buy. It's already set at 500. I'm not sure why that is. And we're going to buy 500 shares. It's going to show up there. So we're going to buy 500 shares. Okay, so now the concern is, well, Don, you bought it when it's trending down. It's below the trend axis. What if it keeps going down? So that's always a possibility. And what I'm trying to do here is set up what I would call it isn't quite getting a dividend, but it's kind of like getting a dividend. I'm going to go to the option station at TradeStation. So bear with me. What happened to our option station? It's here. There it is. And let's go to our options, and bear with me. Let's see here. There. Okay, I don't know why that slips up there, but I want Oxy in here, and it should have. Let me change my linking to dark blue and see if it connects with Oxy. Bear with me. The Option Pro opens up its own window, so I'm going to come back to my my Pebble Beach tab right here. And let me click on Oxy again and see if that puts it in. It didn't. All right, well, no biggie. I don't know why the linking should have populated it right away. So we're just going to put it in here, Oxy. So Oxy is trading at 32.22, and I bought 500 shares. And what I want to do is I want to go out about 32 days, December 17th. I want to go out 32, and I want to sell a covered call against my position. So I want calls, and we're going to scroll down here, and I'm looking at the strike, and I want to go up. Let's see, the strikes are at 32. I bought it at 32.20, 33, got one at 34. So I want to sell a 34 call. And you can see that they're going to pay me. That's pretty darn good. I'm going to receive a credit between $1.15 and $1.17. But we're going to put this in so that it automatically goes in. So we're going to click on this. There it is. And we're going to sell a call. And we're going to do 5 of them. So every one is 100 shares. I've got 500 shares. And so we're going to receive a credit. All right, so this is going to be pretty cool. And that's going to be $575. We'll explain how this plays itself out, but watch, I want the order to go right in. So I'm going to place it as a market. I suggest everybody do this when you're trading options to use, especially on the way in, use limit orders and maybe get the mid price. We're going to place this order and we're now in. And so now what I want to do is manage this account. And you see what I've done here. Here is my position. I have 500 shares that I'm long. I now have sold a 34 call against those shares. One of the things that I can do, let's see if I can do this here, is I can take and we sold it. We received a $575 credit. And what I can do is, let's see if I can, I'm clicking here. I'm going to take these calls and I'm going to put them right on top of my position. And there it is. And that's the neat thing about TradeStation. It says you just I just married the shares or the calls to the stock. Pretty cool. And it now will manage these two together and will be able to show me my profit and loss on an ongoing basis. If I want to break that apart again, I can highlight this, and if I come down here to reset position, I can break it apart. Okay, so there might come a time in the next several days where maybe I want to close these calls. We'll talk about that in a moment, and I don't want to close the position. So I could just break it apart, but for right now, I'm going to put it, and I could treat it separately, and I'm going to put that there. All right. So what I've done is I bought 500 shares, and I have sold a covered call against it. Pretty cool. All right. So what in essence have we done? So let me show you now, and this is where we got it, and we'll update everybody a little bit as time goes on. Now, this isn't an intraday trade. In fact, the best thing you want to do is nothing with this trade, actually. You just want to collect the money in 30 days. So much different than trading intraday. This is one where you don't do anything with it, ideally. But I'm explaining how and where we got it, how we came to buy the shares. These are the shares, and there are the call options. So let me just draw this out for everybody as to what this looks like. And I'm going to go to my little drawing tool, and I'm going to get a vertical line. So what we did was to buy shares right here at $32. And bear with me here as I try to use my drawing tool in the interest of saving time. So we'll put this in. We bought 500 shares at, let's go up here and be precise if we can. I think it was 32, we're going to say 32.20, thereabouts. Okay, 32. I can't, if I click off of this, it's going to be really close. 32, yeah, 32.24 actually. Okay, so we're just going to round it off here. In the interest of time, I'm going to leave it at 32.20. So then what I did was to come up here and sell a covered call at 34 right here. And I sold 5 of them. It's a really neat way to go. I sold 5 calls, and they're covered. in that I didn't sell them naked, I own the shares. And I received, let's see, I didn't look at the price. Let's go back and look at, yeah, we need to go back here. I should have wrote it down. I was looking at the aggregate number. We received a credit of, bear with me. I can open this up here. Sold 5 calls. Value, bear with me. I really should have wrote it down. Let's reset this. I received a credit of $575, so we could divide that to come up with the per share. But I'm just going to put in $575. We're going to do it all together. It's just easier if you guys don't mind. Nobody here to complain. All right, so let's just do this. So I receive a credit of $575. Isn't that pretty cool? And I did this. Now this expires on December, I think it was 17th, right? 30 days. I'll go back and double check that. Doing this, trying to do it on the live here. Takes a little bit. December 17th. All right. So what happens in this instance? What in essence have we done? Okay. Let's assume between now and December 17th, let's assume it's December 18th. And Oxy is trading at $35. This is 34, by the way. This represents, I sold it at 34. I was supposed to write that in. So let's go ahead and do that. This is, we'll put the 34 at $34, right? Bought it at 32. This sold it at 34. So let's say on December 18th, it's trading at 35. Well, I will profit between 32.20 and 34 is approximately $2 and let's not leave anything to chance here. We're going to do a little bit of math, so bear with me. So we subtract 34 minus my cost basis, 32.20. That's $1.80 a share. So times 500, because I got 500 of these things. So I would make $900 plus if it's over 34, in this instance at 35, I keep the $575 plus 575. So I'd make $1,475. Now, what happens if they get called away? It's not like I lose the money. I don't. I just lose the shares, but I keep the money. I keep the spread, the $900, plus I keep the guy's $575, and I can turn around and do it again if I want to, or redeploy my money someplace else. And if I do this in an IRA account, it's a tax-free event. Pretty cool. Okay. Well, what happens, Don, if it isn't over 34? What if it only if it stops short right here? Well, same thing. I keep the advance and I keep the guys the money. I keep it all. I keep it all. What if it runs up to 100? Well, that wouldn't be so good. Okay, because I'm limited to what I can make. I entered into a contract to sell it off at 34. So if it goes to 100, it may on my account window for the time being show me as having a profit, but the call option is going to actually show it as a loss. They treat it together, but the net of it is I only can gain from my cost basis to the strike price, plus I keep the call money. And then the person who buys the call, if it goes to 100, he's the one who profits there. Okay, but I'm okay with that. I'm interested in just, getting a monthly stipend on this transaction. What if it starts to go down? Well, if it goes below my cost basis, yes, I will be losing money, right? In that window, that position. If it had gone down, it would be showing me red. I'd be losing money. But think of it this way, though, too. 32.20 is my cost basis. This guy was speculating when we were at 32.20. He paid $575 for a call option at 34. If the price of Oxy goes to 31, what do you think the value of that call option, if it's got any length of time on it now, and we have to kind of, just kind of discuss this generically here, but as it goes down, this thing is going to go down in value, which means that I could actually buy it back to close on the cheap. So to give it, for instance, let's say this thing goes to 31, 30, 30, yeah, let's just say $31, 31 bucks. And we're just a couple of days from expiration. This $575, I could buy the call to close. I sold it and received a credit. I could buy it to close for probably 10 bucks. And guess what? I get to keep his money, which could actually it does act as a bit of an insurance policy, because I'm also going to be down about $1, right? I'd be down about $500, but I get to keep his $500. So it acts as a bit of an insurance policy. And guess what? So maybe it's at 31. I'm still even, more or less, on the account. I could turn around and sell another call out another 30 days, and maybe then I catch it from running. So the idea is that you are buying shares, you're participating, you are selling to the speculators a call option. One strike removed out about 30 days. You receive a credit. You forego any further upside over that price, and you're okay with that. You don't want to be too greedy here. And then you put time on your side, because what do we know about options? When they start to decay, they go down. They go down in value. But in this instance, we were a seller of the option. And so as it decays, it becomes more and more ours, so to speak, right? We didn't buy the option. Someone else bought it off of us. And if the price of the whatever starts to go down, then I can buy this thing really on the cheap. So it acts as an insurance policy. Now, is there still risk? Yes, there's still risk. There's risk that we lose some opportunity out here on the long side, and there's also a risk that this thing could start to go to 25. Hopefully it's not going to do that, in the span of an hour or a day. What we could always do, if it did go down precipitously for some reason, we could certainly close out the call option on the cheap, count that, keep that money as an insurance policy, and then reassess what we want to do with the stock. Maybe we don't want it anymore, and we just go ahead and dump it. So it is a very neat way to go. And you can do exactly the opposite, which I don't want to confuse the issue here. You just can't do it in an IRA account, whereby you're actually shorting shares and selling a put. And we'll do that at another time. So we're going to clear this. And while I have everyone's attention, let's get one more position on. And let's go to our Pebble Beach. Oops, we were already there. I'm sorry. We're going to go here. And I think the market is still very, very rich. And I'm looking for something that I think could be coming in over the next 30 some odd days. So let's look at, I'm not sure, Dollar Tree is a little on the defensive side, so it's had a big move today. I don't think I want to go after that. Is there anything in here that I'd like to maybe short? I don't see anything on the S&P, so let's go to the NASDAQ. We have a sentiment indicator here, and there's Dollar Tree as well. Here's let's see who. Okay, this is NetEase. That could be pretty cool. That's the most extreme up here. NetEase. It's trading at 110. So I want to take a bet on the dark side, and I want to buy a put, but I don't want to, overpay. So what I'm going to do here is I thought we clicked on it, but we'll put in NetEase, NTES, NetEase. And here we're going to do a vertical put spread. So we're going to come here, we come to the option chain, and NetEase is trading at 110. I want to bet on the dark side, and I'm also going to go out. Do I want to go out that far? Yeah, let's do that. Let's go out to I tell you what, let's just go to 25 days, and I want to buy a put. So I'm going to do this. I'm going to do this in two separate transactions. I don't have to. Well, let's see how we do this. We're going to come here. We're going to buy. Notice TradeStation knows what you're doing in the column. It's a put. I could either be selling, but here I want to, and I'm going to hold down my control key. I think I can do this. I'm going to do a vertical put spread. Going to buy, and then I'm going to sell a 100. There it is. But I don't want 5 of these things. I don't want that. Let's see how much that would be. Yeah, that'd be all right. That'd be all right. So we'll do 5. So what we're doing is we're buying 5 puts at 110, and we're selling, or in the same time frame, this is a vertical put spread, we're selling 5 puts at 100. And let's looking at what other information TradeStation is giving me here. Wanted to see here it is up here. So the maximum loss is the cost of this transaction, which is $2,022.75, and my max profit is $27.25. So it's a little bit over 1, and I'm going to go ahead and place this order. The limit, no, we need to. Do you wish to continue? We're going to put this in as a market, so it gets filled. There was the limit was entered as a debit, a positive note. However, the last quote indicates this order should be entered as a credit negative number. Bear with me. Okay, sorry about that. We put the video into pause, but that trade is in. So here is NetEase, and so we have 25 days to expiration, and we bought a 110 put and sold a 100 put for a credit. So the first one cost us $3,350. The second one, half that leg, we received a credit. So in order for us to make money on this put spread, if we go back to our little drawing tool, it's a little bit different here. So there are the trades up here. And by the way, we'll go back to that in a moment. Let's come here, show you something that we can do pretty cool. So here is NetEase, and we came here and we bought a 110 put. This is 110, and then we came down here and we sold a 100 put. Right? So our bet is that this thing is going down, currently trading at 110. This one cost us about $3,300. This one, we received a credit of $1,000, so the whole transaction cost us about $2,200. If NetEase continues to advance over the next 25 days, then we're going to lose that $2,200. If NetEase pulls back, then we will stand to profit between the distance between here, these 10 points, less the cost of the transaction. If NetEase goes to zero, we don't stand to make any more money than right here because we did a vertical put spread. In essence, that's what we've done there. So we're going to go back though. What I want to show you can do, which is pretty cool. So here is the transaction on NetEase. We got it in two separate legs. I want to take this, and I don't want to have to figure it out. And I just drop one on top of the other, and now it'll calculate for me as a vertical put spread, puts them together. And I can do the same thing here. I can put that, there's my covered call. And so now I can keep track of, the both legs together. If I want to break them up, I can. But I'm already down. Wasn't maybe terribly liquid. Already down $600 because of the spread, which can happen. And but the Oxy is relatively small, so we're going to leave that on in place. So we need Oxy to run and get called away from us. NetEase, we need NetEase to come back to at 100, and we'll see how that plays out. This one we probably won't do anything with for 30 days. Just let it get called away. So this is when you want to just leave it alone, let it do its thing. Don't watch it intraday. The other one, I really don't even want to watch it intraday either, but I do want to take a glance at it once or twice a day, particularly toward the close, to see if there's anything I want to do with it. All right. So what we did there was a covered call on Oxy and a vertical put spread on NetEase. We demonstrated where we got the trade idea utilizing our tool, the Pebble Beach Trade Manager, using just one aspect of that. There's other ways that one could use that. And we also wanted to showcase the Option Stations Pro at TradeStation, which is really a beautiful little product. Good luck, everybody. I'm Baggett on StockMarketCaddy.com. We want to be diversified not just in what we own, but we want to be diversified in how we trade and how we go about managing our risk, and having the available tools. So it isn't just about reading a chart, but having the available tools and knowing how to use them and where to use them is sometimes more than half the battle. Good luck, everybody.